We want to talk more about Cisco and maybe another stock or two in the news with Mark Lehmann, who is the CEO of JMP Securities. Mark, first of all, you had been watching Cisco shares before. I think we talked to you before any of this news came out, and you thought that, you know, even though the environment is kind of soft overall, that they'd do okay because they'd be still shipping orders from the backlog. That's exactly what happened. What else did you think about what the company reported?
Well, I think Cisco, like a lot of big cap tech, has benefited from an obvious tailwind at the beginning of this year and a new backdrop where people are buying big cap tech and expecting the profits to be more important than the top line growth and new opportunities from these big tech. And we've seen this explosion in market cap for big cap tech at the beginning of the year. And obviously, Cisco benefited from that, like a lot of others, as they've reported their fourth quarter.
You have a hold, though, or a market perform, which is basically a hold on Cisco. So if you thought they'd be doing okay in spite of it, what did you need to see? What would make you change your mind?
I think we'd want to see an acceleration in revenues. I think it's, relative to some of the other names that we cover here at JMP. I think that was the bigger issue. But I think it's a reason the stock continues to perform well. And like I said, a lot of large cap tech does, is that we've really gone from a real focus on end markets and growth at all costs to really focusing on profits. And I think that will continue to be the backdrop as we get this clouded interest rate environment to be less clouded as the year progresses. And that's one of the themes that we're saying at JMP here, which is that there's plenty of opportunities for the marketplace. And I think some of the growth at all costs is in the rearview mirror. And the market seems to like that. And I think will continue to do so through the rest of the year.
What does that mean for a stock like Roku?
I think the same thing. I think the bigger cap names, which have been nipped at by an explosion in venture investment for the last 2 or 3 years, are going to find a benefit both from an ability to buy companies that are no longer financeable, as well as from the ability to really focus on the bottom line as opposed to just the top line. The old anthem from some of the companies that we talked to on the buy side, the institutional investors, was grab market share at all costs. And that has stopped, as you know, for the last couple of quarters, and will probably continue through the rest of the year and the foreseeable future.
But is Roku big cap? I mean, its market cap is $7.7 billion. That's nothing to sneeze at, but it's nothing like the Ciscos of the world.
Agreed, and I think but it's a large market. I think streaming is obviously the wave. We saw what Disney said last week. It's big enough. There's some smaller competitors that we've seen like Fubo and others who are not quite as large, who are having a tougher time scaling the profitability. Roku's not as afflicted as they are, and that's why we would expect that one to get a continued market share.
Okay, Mark, thank you.